So we are going to go over the bull and bear pennants. So the bull and bear pennants are pretty self-explanatory. Honestly, this is a bull pennant. The bear pennant will look the reverse of this. And so what this is a large surge of buyers. And so this is just driving the stock upwards. And this again is on a coin just because it's a lot clearer to see. Um, so this is the pull. This can be used for a bull flag, which would be these three lines here and then a breakout, or a bull pennant. So either way, this is the flag pull. And then you have profit taking here. So that's when these people decide the profits are too good, they start to take them. And then shorts start to step in. They see these tweezer tops up here, start to step in, and they drive it down here. But overall, you have a bullish formation going on. Now, because of this flag pull, you have a lot of people that did not take profits and they're not selling. They're not going to let this price drop beneath support, whatever their Fibonacci's, whatever they have up there, and they're just thinking, you know what, I'm not going to let it go beneath this price. Nobody's selling. And again, the buyers step in once they kind of see it struggling here, pushing it up, a little bit of profit taking, and then eventually it comes to formation here and it just breaks out. And once it breaks out, you can typically use, let's go here, with half of the flag pull. So I will draw this here. And then that seems like it's about half there. And so that's how you can predict what a move is going to be from the breakout point. So you would start that at the bottom of the candle there, and you can see that's not bad. It's pretty accurate. So the only thing you need to get right is kind of how you angle it, because that can have you taking profits somewhere where you shouldn't, or letting it run when you shouldn't. But generally you'll go for half the size of the flagpole. And then for a bear pennant, I believe this is on the 5-minute here. Yes. So exactly the opposite. You have the flagpole here, and then you have buyers stepping in as these shorts are taking profits. Drives it up, a little bit of a evening star. Shorts step back in, and it's a little bit of a back and forth as it consolidates here, and there's less move on either side. There's less buyers, there's less sellers, there's lower volume in here, and then it just decides to break down and it just starts crashing down. So that's how you would play it. I typically, I will play the actual break of the pennant, but you shouldn't. This should be the first line where you take an entry point. So this is where this resistance point, these two candles here, is going to be your entry. You will have, typically, not in this case, have some kind of resistance at these candles here, and then you can find your profit going that way. I will switch back to XRP on the 4-hour, and I will run over this really quick. So again, this here would be where I would enter at that candle. As you can see, it broke out, it hit that resistance perfectly, would have been a solid entry on this candle, and that just rides up from there. And these are pretty level. There's not much difference between these two candles. So you could, if you want, wait for this to break, and that still would have given you an excellent entry. And I place stops here. So at the bottom here, this would be your support. And because it didn't fall here, it didn't fall any lower, that seems to be a really nice spot. Again, these people are stopping it from going lower. So that's where I'd place my stops. That can be a large drop, but you can almost not bet, but you can anticipate a move that is half the size of this flagpole to break out. And then this was just bull flag after bull flag. So, you had a ton of profit potential on these. And these will play typically the same way as flags. Like I said, these three candles would be a flag. Now, if this was a doji and then the next one just kind of broke up, that would be a bull flag. And you will trade that the same way, with having half the distance of the flagpole to be your projected profit. And you can also pull fibs and see if it's going to hit those. So on crypto, the Fibonacci's work perfectly. On stocks, you can use the fibs, but I like doing half of the flagpole to measure that out. So what you want to see is this here. large volume, then in the middle of the pennant, low volume, and on the breakout, high volume. That way you know you have a lot of buyers stepping in. and that's just going to surge the stock or the coin forward. If you had if you have low volume breakouts, there's nothing to support it there. You have a false inflated candle almost, and it can very easily fall back down because you have no kind of buyers here to catch it and keep it going forward. So make sure that you look out for that.